Today, I'm going to share with you three things to focus on to spot high probability trade setup within every 60-minute cycle. Note this, I'm not inviting you to go and trade every 60-minute candle out there. The aim of this video is to try to show you where the major expansion are likely to happen within every 60-minute cycle. And for me, I trade majorly the London session and the New York session. The London session, I focus on only the 3 a.m. candle. So from 3 a.m. to 4 a.m., I'm done. And for the New York session, I focus on price from 9:30 New York local time to around 11 New York local time. And that will be all for me. So today I'm going to be taking you a little bit in depth into the trade. I'm going to be sharing with you the first screenshot I took the moment I entered the price. Although these things are meant for my journal, but I'm going to be sharing some of them with you down to the last screenshot I took and the thought process and the way I was able to come about this trade, the way I was able to manage it down to the TP here. I'm sure it's going to be very, very insightful for you. And all I need from you is just to pay attention. The first thing is to know where you are in price. Very important. And this is very simple for you to know because basically it's either price is in discount, premium, or equilibrium. And if price is in discount, you're looking to buy. If it's in premium, you're looking to sell. If it is in equilibrium, you are not doing anything because it's most likely to consolidate. So this is the Euro USD chart here, and I'm on the daily time frame. I want to know what is happening in price, and with that information, because I entered price, I pick interest in price from around 3 a.m. So at the close of 2 a.m., I'm coming to the chart, I'm opening the daily time frame. I want to know what is currently happening in price. I want to know where we are in price. And how did I go about this? You look at this candle, the moment it opened, it started trading to the downside, traded through the consequent encroachment of this discount week. You want to get that measurement, you take your fib, you measure from the low here down to this level here, you get the 50% of the week here. So it traded through it and went down, took out the previous day's low. And you and I know that liquidity rests below previous day's low and previous day's high. The type of liquidity resting below this low is called sell side liquidity. So price took it out. Taking out sell side liquidity below the daily low like this means we are in a discount price. And this is so important to me because this is the daily time frame. Because any move that happens on the daily time frame here, it may be very little, but on the lower time frame which I trade, it makes a whole lot of sense. It's a whole lot of range for me to trade in. So that is why it's important to start looking at price from the higher time frame like this. Now the next thing, you move down to the lower time frame. From the daily time frame, I usually move to the 1 hour time frame. And what I try to do is identify a logical target. So if you can see, we have a clearer picture on the 1 hour time frame here. The 2 a.m. candle, which is this candle here, traded down, took out this low here, was unable to sustain the move to the downside. The moment I saw the 2 a.m. candle closing this way and the 3 a.m. candle open, I have the assurance that there is every possibility for price to trade at least to the upside a little. Even if it's not going to come up for all this buy side liquidity, at least you should trade up a little into this fair value gap. So this fair value gap now is going to be my target because basically what price is doing is either price is trading to come and take a low like this, or is trading into a fair value gap. So that's just a summary of price movement. So any movement you see in price is coming for a low, either sell side or buy side, or is trading into a fair value gap. So after taking this low, the most logical place to see price trade to is this fair value gap. So have this range from here to here now to frame a buy trade. I don't just enter buy. I move down to the lower time frame again. Here's the 15 minutes time frame. I want something to anchor this buy on. The summary of price movement is that it's trading to a fair value gap, or it's trading to either sell side or buy side liquidity. So I need something to frame this trade on. Now I waited a little and I had this 15 minutes fair value gap presented right here. So all I was waiting for was to wait for price to trade into this 15 minutes fair value gap, so it can be used as an anchor to take us into this fair value gap on the hourly time frame. So here is the 1 minute time frame, and This was the point price traded into the 15-minute fair value gap here, and we had this push to the upside, giving us this fair value gap here. So the moment I saw that, I started anticipating the order flow to continue to the upside and down into this fair value gap from the early time frame right here. So, and for that to happen, it means this fair value gap has to sustain price to the upside. So the moment I saw that this fair value gap was sustaining price to the upside, I had the order placed here. I think it was around here. I took the buy around here, and then I anticipated this order flow to be sustained until it gets to my TP right here, and the stop loss was just placed below this low, because if I'm anticipating price to start moving higher, then it shouldn't be coming lower to take out this swing low. So, and that was the trade here. Just from here, I took out partial here, then I waited for my TP to be hit here, and it was a very nice one. And if you observe, you saw how the order flow shifted. Look at when we had the first fair value graph that was presented. Look at it here. Price traded into it, but was unable to color outside the fair value gap, so it was used to support price to the upside, gave us an order block here and a little fair value gap here also, so it supported price to the upside again. If you observe just from this range, sorry about that, if you observe from this range down to our target here, you saw that every down close candle was supporting price to the upside. You can see that here. Look at this down close candle as another block, supported it to the upside. Another down close candle, price traded into it, supported it to the upside, and that was how it continued up to the point where it traded to our target here. And if you have access to the chart, the moment we go to the target, I think it wicked up a little, and you saw that the order flow shifted to the downside. So that was just basically it. Looks very simple, but this is just price. It's not as complicated as you think. So I'll see you in the next video. If you got anything from this video, just drop a comment in the comment section below and just hit the like button. It will go a long way in supporting the channel. Thank you, and I'll see you in the next one.